Good morning, everybody. It is Wednesday morning, March 5th, and we're happy to see you again on our Wednesday Live. As I promised this year, we're doing fewer of these live events, but we are still happy to announce that once a month, myself and David Gazarian from the IQ Mortgage, we will be happy to see you guys on our Wednesday lives and to update you with everything that is going on the real estate market and the mortgage market. And while we are waiting for David to join us, I am going to give you a short update on the real estate market, what is happening within the last week, or maybe what is happening within the last 3 months. So if we look at the forecast and the past data, you guys will see that no crash happened in 2023. However, we experienced a little bit of a rate improvement in December, and that caused a nice little rush for the buyers and sellers to go and start quickly shopping in Las Vegas area. So in my 13 years of doing real estate, this is the first time that I was seeing a lot of traffic on my listings on December 24th and December 25th. It is a rare thing to see, and moreover, we received like 4 different offers on December 25th. So that tells us that a lot of those people who's been waiting and sitting on the sidelines to buy the property, they're back on the market and they're slowly activating. Let's see if
Can you hear me? Good morning.
Good morning. Yes, of course, we can hear you.
How are you?
Doing great. How are you doing?
I'm okay. Hold on. What's wrong
Wonderful.
with my headset?
So, just a little update on the real estate market. So, we have, in the last 7 days, we had 804 new homes going on the market. Meantime, we had 947 homes going under the contract, which tells us once again, those numbers are indicating that we are
Inventory is dropping.
100%. We don't have the inventory. David, your mic is super loud. If you wanted to make it just slightly lower, if there's such a possibility. I don't know.
I'm on earpods.
Okay.
Excuse me. Is this better?
Yeah, that sounds better. So we are experiencing a lower inventory, and we're experiencing a lot of shifts in the market what comes to play. So in 2023, we've seen a lot of contributions from the sellers. Now the sellers are not as generous as they were in 2023 because the inventory is really low, and I think that our buyers are getting used to the new rates. And David, could you please update us on the rates? What's going on with the rates these days?
Yes. So, hi, Alexandra. Hi, Leo. I saw Raul there somewhere. I don't know if he's still there. I want to say hi to all my friends. So rates have been unchanged for many months, actually, realistically. When it comes to the Fed affecting the rates, Alexandra, I mean, last time the Fed said he was not going to raise rates early December. Market reacted very, very, positively, optimistically. We got so many phone calls. I mean, we were cranking out 5 pre-approvals a day. That was all he had to say is, I'm not raising rates anymore. That's all he had to say. He hasn't even dropped rates. Now, what happened is on February 12th, the CPI index came out and the inflation was a bit higher. The January inflation went up a little bit compared to last January inflation. And the markets reacted violently, and rates went up about 0.25%. They went up. So that's not the Fed, that's the markets reacting to the CPI index. Now, we've got another CPI index coming out next Tuesday or Wednesday. It's usually on the 12th of each month. So we'll see what the inflation index is for the month of February. If it is higher, again, 2 months higher, I could even say that the Fed may even raise rates on the 20th when he's got a meeting. If it's lower, then he'll probably leave it unchanged. We should not hope he's going to drop rates this quarter. But he's going to want to see probably several months of, again, downstream before he cuts a quarter for us.
And I would want to say that, when we're talking about the Fed's changing the rate, we all need to remember that when they are increasing the rates, they're increasing it with the speed of light. They're increasing it constantly, and they're making big jumps. So
yes.
For those folks that are waiting for the rates decreasing, we need to remember, guys, first of all, the rates are not decreasing to 3%. Like 3% is not happening anymore.
Never.
So any rate, hopefully never. Hopefully we're not in this stage of another crisis where the government has to boost the economy by lowering the rates. But when we are talking in the normal market economy, when we're talking about lowering the rates, we're going back to December of 2019. So we're going to the rates that are closer to 5.5. Correct. So for those of you folks who are hoping that you will be able to afford the house or buy the house when the rates are 3%, well, you might as well wait for the next pandemic or for the next disaster to happen. For those of you who are looking for the 3%, for the 5% raise, you guys are realistic, but once again, nobody can guarantee the time frame when that is happening. There's no such a thing as the rate, as the guarantee that the rates are going to go down. We heard from the Fed that the rates will be dropped 3 times this year. When it is happening, most likely it is going to happen within 90 days before the elections. That's the regular that's the regular thing.
Exactly. So in the summer, we should get busy.
So looking into May, June, guys, this is when you're looking to be busy. Once again, remember, on top of it, you're going to experience another thing, and that thing is going to be the kids are out of school. Once the kids are out of school, we have a lot of market movement because the majority of our sales and the majority of the moves are happening within within the 3 months, I would say 4 months, from May through August, while kids are out of school. So you can actually layer that on top of the lower interest rates. So David, what is your expectation, and what is the best strategy that you can propose to those who are thinking of buying the house this year, and how should they strategize their actions to get the best of it, to get the best of the rate, to get the best of the price?
I would say, Alexandra, there really shouldn't be no strategy behind it. I've been telling people, buy as soon as possible. The rates dropping is the worst thing that can happen to someone that's looking to buy a house. They're waiting for it, but it's the worst thing that can happen to someone.
Let's explain it. Let's explain it why it is the worst things happening to those who are looking for the house. So guys, if you're looking for the house, and if you want to know how exactly, what exactly happening when the rates are dropping, just go into Zillow, look at any home, and there is a estimate of the price, and you can go back into history. So go in and see what the house price was, any house, take any house, look at that price, at 2019, look at that price at 2020, and then look at that price in 2021. When you see this graph going up as crazy, 2021, 2020, 2021, these are the pandemic years. Like some some can see it at the end of 2022. When you see that, this is the effect of the rates dropping. So when the rates are dropping, the prices are going up. It works like a pendulum, guys. It doesn't work in the stage where the prices are going down and the interest rates are going down. It doesn't work this way. It works like this. So if you're looking for a better price, you can wait. Like, you can buy right now, and by owning your home at the time when the interest rates are going down, you can actually win on both ends, getting a better price and getting a better interest rate, aka refinancing when the time is right, when the interest rate is right. Because David, can you go back in memory on 2020, 2021? How hard it was? Like, how many purchases were you processing versus the refinances?
It was 50-50, Alexandra. I averaged about, I don't know, I would say about 20 to 23 purchases per month. We had just about as many refinances, but obviously purchases take precedence, but yeah, about that many.
Yeah, so that is something that is important to remember, that when you have the rates going down, this is the best time to refinance, not to shop. Because even right now with the inventory, with the low inventory that we have, and I can tell you, like yesterday, I was in a multiple offer situation twice. So
You
two offers.
beat that, and I didn't even know because I was sitting across from clients in the conference room, and you were successful. And yeah, good job, by the way.
Yeah, so, but that is the reality of the market. And wait a second. What is the interest rate right now, David?
Okay.
What is our interest rate?
It's an incorrect question, but FHA is going to be about 6.1, 6.2. Conventional, again, depending on down payment and closing. Down payment and credit score. Conventional can vary from like 7.25 to 7.8. Again, depends on how bad the credit score is. So conventional is in the sevens. We do push sometimes. Like 6.8, 6.9 conventional, a little bit of down payment and a little bit of credit from my office, but yeah, conventional is usually in the sevens, FHA's low sixes.
Yeah, the reason why I'm asking you this question, not to quote the interest rate, but to give our listeners and our viewers the understanding that the interest rates are still at its highest. And I think that
Yes.
the last article that I read, I think it was yesterday, that right now, like as of yesterday, the rates were the highest this year. So we're at the highest peak of the interest rates this year. So why people are buying? People are buying because they know they're going to refinance within the short period of time, but they do not want to pay $40,000, $50,000, or $70,000 more for this house once the interest rates go down till 5%, because they will still take advantage of that 5% interest rate. They're just going to do it when they're not in the multiple offer situation. There is no rush and there's no lack of inventory, because everything gets grabbed off the market. We all remember the frenzy of pandemic years where we were overpaying and still not getting the bids in. It didn't matter, it didn't matter how hard we tried. It was just the complete lack of inventory. And we are very close on the inventory levels. We're very close to the pandemic time frame. So guys, don't hope for the best interest rate and that you're going to win the lottery at that point. Like, be strategic, be smarter about it. Do not go, do not go with the crowd. Be strategic about your home purchasing. David, what would you say to those who are saying that, well, like, renting is cheaper right now?
That's true. Renting is cheaper. They're absolutely right, and it's not the right thing to do, Alexandra, and we can talk about that. But when it comes to dollars for dollars, renting is cheaper than mortgage. And you and I are not going to argue that. But should you continue renting, or if you can afford, should you add more to the a mortgage? Well, for that purpose, I built a calculator because I really did question last year if I should continue what I'm doing or I should become a property manager. I really did question the purpose of mortgages, and I built my own custom calculator. And after all said and done, and all the little nitty gritty calculations are done and come together, renting is a very sure way to stay poor for the rest of your life. Unfortunately, that's what that calculator ended up showing me, and that's what I show my face-to-face appointments, my clients.
And I would say a few things on that account. So first of all, those folks that are thinking that they are saving money by renting. First of all, are you truly saving? Let's be honest over here. Nobody's watching over your shoulder, but if you are saving by renting, let's say your rent is $300 lower, $400 lower than your potential mortgage payment. If that's the case, what are you doing with this $300 or $400? Are you truly saving those few $100s, or you're actually, you're actually going and spending them every single month on the things that you do not necessarily need? That's number one. Number two, if you're investing it, like, if you're taking and putting this $300-400 aside or investing it into something that brings you money, I'm absolutely happy for you. But if you are just spending it on another pair of shoes that you need or might not need, or just, like, going out an extra time, well, maybe you should be thinking a little bit further into your future and making that $300 or $400 investment into your future and the wealth of your family and your future generations. That's number one. Number two, for those folks that are saying that the interest rates are high right now, always remember that whatever interest rate is for the mortgage at the moment, when you are paying the rent, it is 100% interest rate, because you are getting absolutely zero back out of it, and this is 100% interest rate. So whatever the mortgage rate is, even if it is at 8 or 10%, it is still lower than 100% interest rate that you're paying when you're paying rent. And then the third thing is that owning the real estate is the long-term investment, and it's a long-term activity. So whether you rent or whether you rent right now, your rent will constantly go up. Rents do not go down. The rents constantly go up. Of course, and the prices go up. The prices of insurance go up. Our taxes go up. So your landlord cannot afford not to increase the rent. So your rent will inevitably go up, and you can never fix it. When you're going with the 30 years fix, or when you're going, it doesn't matter how many years, when you're going with the fixed rate mortgage, you actually fix that principal and interest payment, like that portion of your monthly payment. It is getting fixed, like it is staying fixed, and the only thing that can change on you is taxes and insurances year over year. David, right now, like,
I'm here.
Yeah. I have a lot of questions right now,
Okay.
and I just had this conversation with this seller. should we accept the offers with the lower down payment? Because we are obviously, like last night, I received an offer. It's a good price home, and the buyer is doing 5% down, and the buyer is still asking for the closing costs from the seller. And the seller asked me how stable the buyer is, and should they accept the offer with the 5% down payment. And after talking to the buyer's agent, the information that she told me, she said they're doing the 5% down payment because they have 4 kids. This is a big house, and they just received their IRS check back. And this is where they got the money. Like the majority of their down
Oh boy,
payment
wrong
is
answer.
is coming from the IRS. So they get this one shot out of the year, like to get the property. And first of all, talk to us, please, about using the tax return money in down payment, and is it okay to put a 5% down payment right now?
Well, it is, because we have a client and you sent a contract to me last night and they're doing 5% down. So it absolutely is. And quite often, Alexandra, we have clients that want to put more, 10 to 20% down. And we tell them, listen, that's fine, do 20%. You'll get rid of mortgage insurance, but you could do this loan at 5%. And they're like, okay, I'd rather do 5%, hold on to my money. I don't know what's going to happen. There's uncertainty in the market. I want to buy furniture. I want to remodel the house. So putting 5% down is not necessarily a sign that this client is weak financially, even though we do understand that from the seller's perspective, they don't know the client and they don't know what we've done to pre-approve this loan. So all they see is the only financial bit of data that they get is that down payment. They're like, okay, so if you're only doing 5%, not 20 or 40, that means you're probably not as strong as someone putting a higher down payment. To answer your question, you can absolutely use your IRS refund to use as down payment or closing costs, because usually March 1st, when the IRS refunds hit the people's accounts, that's what really starts the purchase season. So absolutely, that's the cleanest money there is on this planet. That colorful check.
Yeah, that's the greenest check you can get, correct?
Colorful check with the Statue of Liberty. What a beautiful check. The account number, you could get a $8,000 or $10,000 refund, but there's a bunch of asterisks. There's probably 7 or 8 asterisks in front of it, which means that check could be $1 billion. That's like the biggest bank account in the world. Of course it's acceptable.
And it is very stable. And David, if we're talking about the tax season, let's just remind our listeners about the things that you should and should not do during the tax season if you are planning to purchase a home this year.
Well, if you're a W-2 employee, there's not much you could do because you earned what you earned. It's recorded on your W-2. Just get your taxes done, send it to the loan officer. If you are self-employed, however, I would get the drafts ready and I would send the draft to the loan officer. I always recommend being smart and not filing taxes, then going to the loan officer. Mr. Loan Officer, can I buy a house? Loan officer looks at it. Sorry, you deducted too much expenses. Maybe have the loan officer look at the draft, understand how much, what kind of house you're trying to get, how much income you need to show. And quite often, when people buy, equipment, Alexandra, there's this thing called depreciation, which you can sort of manipulate. You could get 100% depreciation, you could get 50, you could get 20% depreciation, or 15% do the makers or straight line depreciation. So let the loan officer work with your CPA, plan your income for this year so you qualify for that house. Once your loan officer approves your loan with the drafts, and you know you have an approval, that's when you file your taxes, pay the IRS, do all that after you have the assurance of having an approval.
So when we're talking about filing, so we have the March 15th for the S corps, we have the April 15th or whatever the date is this year, 14th for the personal taxes, and we have the delayed tax. We can file the extension. So should I file now or should I file the extension? How do I figure out what is better for getting a loan?
To answer your question, tax day is April 15th, Monday of this year. It's not the 18th. They would push it to the 17th or 18th if that's a Monday. Okay. If 16th or 17th are weekends, then they're going to push it to the next Monday, the next work day. So it's April 15th. When should you get an extension? Was that the question?
Should I get the extension or file the taxes on time? Like, should I file them in April or should I file them in September if I'm planning on getting a house this year?
This advice is going to vary from client to client. There are some clients I tell them quickly get an extension. Don't do anything. Wait till June. If you don't know what you're going to get, Alexandra, if you know you're not shopping till June, and in June you don't have no idea what kind of income you're going to need, what kind of house, what kind of down payment. There's so many moving parts. So there's moving parts that are unknown to you. You have to get to that month time shopping. There is no reason for you to file taxes now. I tell clients, get the extension. I'll work with your CPA. When you have more information, what kind of house you're going to get, how much down payment you'll have, and I'll work with your CPA then. If you file your taxes now, you are limiting yourself to that income, and you may not qualify for the house that you want when the time comes for shopping.
This statement, only the people that file tax returns can afford the loan or can qualify for the loan. Would you say it's true or not true?
It is not true, because taxes, full documentation loan, that's what we have, what we call government loans, would be VAs, USDAs, and conventionals, and FHAs, right? 4 groups of loans, full documentation, sponsored one way or another by the government. There is a whole different industry out there, Alexandra, that do alternative loans, and we get more and more different variants of loans that could be really interesting sometimes. Because last week, really, I spoke with an account executive from a bank out of California. They do this wonderful loan that I've been waiting for and looking for several years. And only one bank in town offers it. I couldn't offer that product. Now they do, and I have that on my plethora. So you don't have to file taxes. You just have to remember that a mortgage is 3 components: the CIA, the credit, income, assets. If you're missing one of them, okay, if all 3 are good, you can apply for a government loan, FHA, conventional, VA, and you will get a decent interest rate. You could put a low down payment. Let's say your income, you don't want to show taxes. That was your question. You can compensate with a large down payment. It is possible. There are programs where you can compensate with a large down payment.
Excellent. So not having filed your taxes should not stop you from looking at the mortgage, looking at getting the mortgage if you're looking to purchase, correct?
Absolutely not. Just speak with us, talk to us, and we will tell you. Again, if you have a large down payment, 25% or more, there are other avenues, there are other doors, other programs that open up to you. So just talk to us.
Absolutely. Now, if your credit score is impacted, can you still get a loan?
Okay, so once credit score is impacted, the borrower really loses the appeal from the bank's perspective. There are some alternative lenders that will go down to 550. FHA goes down to 580. Usually my habit is I will send it to a credit repair company, have them work with you. Credit is a very good way to demonstrate to the bank your habits, what's your financial hygiene? Are you really paying what you borrow? And if you've got bad credit, no bank is really motivated to give you money. So, but again, there are some programs that will go down to 550. I've never done one. I honestly, I would refer it out to another loan officer, another hopeful loan officer. I just those programs come with way too many restrictions, Alexandra.
So you just talked about the bad credit. How about the brand new credit? We have a lot of folks right now that are immigrating from different countries, and their FICOs are super fresh. They have brand new social securities, and they don't really have the history. What kind of tips could you give them in regards to their credit score, and what do you guys see? How soon they become eligible, and what kind of credit score hygiene do they need in order to be ready to qualify for a mortgage in the nearest time possible?
So this is interesting. You mentioned this because this guy came in yesterday trying to, I'll probably meet with him. I like his flyer. It's called Credit Line. I'm just going to advertise him. So he's local, even though I have been referring out to a Los Angeles credit cleaning bureau. They've been okay. I've been working with them for many years. But this guy seems interesting. And I did mention, I said, listen, I get a lot of Ukrainians, a lot of people after the war that came in. I mean, they're in the country for 2 months and they want to buy a house, which is unprecedented. And generally, your FHAs and conventionals, Alexandra, are going to want to see a 2-year credit history. It's just something that the electronic underwriting system is looking for. But these kids can put you on trade lines and give you that history and maybe do it that way. So there are ways of building credit if you don't want to wait 2 years. I'll just refer you to a credit repair agency and then they'll kind of consult you through that.
But let's talk about credit hygiene. Let's say you just moved to the country and this whole system is brand new for you. You don't know what's right, what's wrong, and like you're getting the advice left and right. And a lot of times, people will get a very silly advice from people that they that have no idea what they're talking about. They just throwing it up into the air and see what sticks, and
Sure.
they will impact your creditability. They will impact your score. So let's talk about everybody's like, you have to build your credit. What is building your credit?
Okay. Let's talk about it. Building your credit means that, hello, did I lose you?
No, you didn't lose it.
Okay.
Building your credit from the standpoint of the loan officer, from the standpoint of the person who's going to look at the profile as the mortgage broker.
Let's understand what a good credit is, Alexandra. Good credit is 4 things. When I pull a credit report and someone tells me, this is quite often, David, I don't know why my credit is low. I'm paying my bills on time. I just don't know why my credit is low. It just will not go above 700, or it's stuck at 720. It's not going up. Make sense? So there's always one of the 4 reasons, or more than one, but there's 4 reasons. If all 4 are perfect, you should have an 820 credit score. So what are these 4, Alexandra? Number 1, old accounts. The age is so important. If you've got a 1-year-old credit, you're not going to have an 800 credit score. It's just not going to happen. In fact, when you get your Social Security assigned to you, you start building credit through a secured card. It does not index. It does not assign a credit score for the first 6 months. You don't even have a credit score for 6 months. So age, number 1, the size of your accounts. If all you got is $300 or $500 credit one accounts, you're not going to have a high credit score, because there is a whole tier of second-rated banks, such as Credit One. They will charge you a high credit score, a high a membership fee, and they have high interest rates, and they only extend loan to people with bad credit. So large accounts, 5 to 7,000, 5,000 or more, even a $3,000 account is not considered large. 5, 7,000 or more, maybe 15,000. Number 4, no negative history. This goes without saying, no negative history. Even one late payment is going to hurt you. So that's like the most important thing. And so I mentioned size, age, no negative history, and the fourth one is, give me one second.
No inquiries?
Low balances. Low balances. If you spend more than 15% of your limit, your credit's going to drop. I see people that have 5,000 cards, and I see people that have $300 cards, and I'm like, listen, pay off the $300 card. Pay it off. I would rather you spend $300 on a $5,000 card or $300 on a $300 card. You're putting in 100% usage on that card. That's keeping your score low. So when you want to pay down your credit cards, you should always start with the smallest credit card. Start with the smallest credit card, because that's going to impact you the most. It's going to help you the most, because the balance, outstanding balance compared to your limit, is the highest, and it's hurting you the most. Does that make sense? So low balance, and that directly correlates with the size of your card, obviously.
Excellent. And David, I think your camera froze, so if you could turn it on and off for us, that would be awesome. Not that particular way, but okay. We'll wait for you to join us again. So one of the things that we also see very often that people get told, oh, you need to have several credit lines, and every time you go into the store, it could be any store, it could be Macy's, it could be Home Depot, Walmart, they're going to offer you to open a credit card from their store, or credit card associated with their store. So let's say Walmart offers you the credit card, Home Depot offers you a credit card, Macy's does, like Best Buy does. And something that you need to be very aware of is that if that store puts an inquiry onto your credit account, first of all, it stays there for a year. And second of all, banks don't like to see it that you are applying for credit left and right, and especially when you are getting denied. So for those of you guys whose Social Securities are brand new, please do not rush into applying for 20 different credit cards at a time. Please do not rush into do not make your car purchase or your mortgage application as the first inquiry on your credit score, because most likely you're going to be denied because you don't have the history of being in the country and using your credit. So be very, very strategic, be smart about your credit, about using your Social Security number, and about applying for different lines. If you have questions, David, do you and your team actually help folks that need kind of like the deep dive into the understanding what to do with their credit and how to build their credit? Do you guys support those people? Do you guys have the conversations with them? And do you guys explain to people what would you eventually need to see as the mortgage representative on their credit for those people to be able to purchase?
So when we meet with someone, ideally we want to meet with them, but if not, it's going to be a phone consultation. And if my answer is no, I cannot approve them for a loan due to a credit, credit item, credit, whatever the problem is, if it's one problem. I'll talk about it, Alexandra. Sometimes I'm known to talk more than they want to listen because it's a boring subject, but I will give them my 2 cents on what they need to do to have a good credit. Unfortunately, what I have noticed, and this is the reality, if someone really has 400 credit score, that's a chronic habit that they have. It's not a mistake or a lack of information, lack of education. It's just how they are. And I'll give them my best, advice, and I'll refer them to a credit company. Typically, we'll never hear from them again because they were just hoping if they can buy a house with 400 credit score, they're not going to do anything. So for you to have a good credit score, you need to do something about it. You need to want to have a good credit score. And my favorite annoyance, I should say, is when I am taking an application and I'm like, can I pull your credit? And someone says no. If someone says no, I don't want you to pull my credit. I want an inquiry. Alexandra, I know this person's going to have a really good credit score. He is protective of it. And then I have to ask them, beg them, please let me look at your credit. It's going to be a soft credit pull. But as soon as someone says, no, don't pull my credit, I'm like, thank God this person's protective. They should have a good credit score. That's how it usually is. If someone says, yeah, go ahead and do whatever you want to do, pull credit, I'm going to have a 570 credit score. It's a law. It never fails.
So let's break it down. What does it mean to pull credit? Who asks to pull credit, and how does that affect the consumer?
Who's hot? Olga. Interesting. Pull credit means to pull a credit report, to have a report that shows your credit scores. There are 3 credit bureaus that assign credit scores, okay? And they vary from 400 to, say, 815, 820-ish, 830, I should say. And it has all your accounts from creditors, and it does reflect the payment history, your balance, and a whole other type of information, such as your credit, your address history, residential address, the name variance of your name, the mistakes on your name, AKAs, so to speak. So a credit report is a very important thing to see before a credit is issued.
Okay. And why you don't want people to pull your credit report left and right? How does that affect you?
Sure. If the more inquiries you pull, Alexandra, it adds to inquiries. A number of inquiries will drop your credit score. Now, this does not necessarily pertain to a mortgage inquiry, because yes, a mortgage inquiry may drop your credit score by, 3 to 5 points, maybe 7 points, but that goes back after your mortgage is approved. Once there is a mortgage account reporting on your credit goes up, and once you make up 1 or 2 payments. So that's a temporary drop, and it's going to go up higher than it was because of the inquiry drop. But again, from the bank's perspective, the more you apply to different places, it seems desperate. It seems that you're in a financial trouble. So more inquiries never looks good. You don't want to have more than 2 inquiries in a year, maybe 3, on your credit history.
And you mentioned something called soft pull. What is soft pull? What is hard pull?
So hard pull is, if I do a hard credit pull, if you have a tool such as Credit Karma or any credit monitoring bureaus, it will record, as you will see, an inquiry that David, IQ Rate Mortgages, just pulled your credit. It does record an inquiry.
Leaves the permanent record, correct?
Not necessarily.
It leaves
2
the
years.
record.
It does show that someone pulled your credit, yes. If you do soft, it is identical to you pulling your own credit, such as on Credit Karma or Experian or myfreecreditreport.com, whatnot. It does not leave a hard credit. So we always start the transaction, the pre-approval process, by pulling soft, because I want to kind of, Alexandra, peek into the credit report. What's going on? Do you have a lot of balance? Do you have something needs to be cleaned or fixed? There is no reason for me to do a hard, because quite possibly we may need to do some work to increase your credit score, and we aim to only do one credit pull. And that one credit pull is when I'm confident that you have a high credit score. We've done everything for you to have a high credit score, and that's when we do the hard credit pull.
And that is understandable. Now, can you tell me a little bit about the difference of the credit scores? So I come to you, you pull my credit, like you do the hard pull, and you give me the numbers. And then I'm looking at my phone. I have my Bank of America showing me one credit score. I have Credit Karma showing me three credit scores that are way different from what you're quoting me. So I have Discover showing me another credit score, and my American Express is showing me the third credit score. Who is right? Who is wrong? Why they're all different? And
Of
which
course.
score you're going to go with as the mortgage broker.
Okay. So for now, Alexandra, we're looking at FICO 245, FICO 245, there FICO 2, FICO 4, and FICO 5 for the
So
three
there are
modeling.
different tiers. There are different tiers of FICO
So
scores, correct?
there are 10 FICO scores from FICO, well, I want to say FICO 2 all the way to FICO 10, 9 FICO scores. For example, FICO 8 is your consumer score. When you pull your credit, you typically pull a FICO 8. That's a different algorithm working. That's a different way of calculating your score. It's going to be different than your FICO 4 or 5, which are your mortgage score. So again, we as mortgage bankers look at your mortgage score, and that's going to be different. Some people look at Credit Karma, which uses a Vantage score. Well, nobody uses Vantage score except Credit Karma. So that's Credit Karma is good for other things, not necessarily for the credit score. Even though you may be interested to know that there's a Fannie Mae initiative for the next 2 years. Within the next 2 years, they're going to move to FICO 8 and to Vantage score. So these traditional credit score modeling that we're using are going to be no more.
Interesting. So, and this is the reason why we're seeing different scores, and they may vary in numbers. So the same TransUnion score that you are showing and that my credit card application is showing could differ, but it's not going to be drastic difference, is it?
Well, sometimes there could be up to 20 to 30 difference. Yeah.
Wow.
Hello?
Are you there with us? Yes. Yes.
Hold on. I get calls and my Bluetooth drops. I apologize.
No worries. So, but David, I wanted to thank you for joining us once again. For those folks that are looking for the mortgage application this year or any time in the future, for those folks that are that have mortgage questions, and I will never ever stop repeating it, that David and his team, first of all, you are a multilingual team, that you guys speak not only English, you accept clients that speak Russian, you accept clients that speak Armenian. What other languages do you guys speak within your office?
Just those for now.
So
We had a
there are
girl
3
spoke
languages.
Greek. Yeah, so for now we're limited to 3. We will hire a Spanish speaker. They're in demand, unfortunately, but I'm looking for one.
Great. So, but for right now, you can accept all kinds of applications, and you can assist clients in English, Russian, and Armenian. You also, like, I love what your team does when you guys support our clients for many, many months, and you help them build a credit. You refer them to companies that clean out their credit and get the applications ready. for the mortgage?
At the end of the day, Alexandra, I tell clients we will hold your hand to buy a house, and you will own a home if you're truly motivated. But really, if I see that we're communicating with you and you're wasting our time, you're not responding, it's up to you whether you own a home. Then if you're interested, we'll be interested. We last year we closed a loan. We followed up for over a year and built this guy's credit over a year before he bought a house. 2 weeks ago, Andre sent a pre-approval to a realtor that sent us this client 3 years ago. This realtor had totally forgotten this client exists. And she got a pre-approval letter because it took us 3 years to pre-approve this client, do his taxes, save up money, get his credit score to where it needs to be, have a payment plan with the IRS. It was so much work. The realtor even forgot he had a lead, he had a contact. Now he's working and showing houses. It's crazy sometimes. It takes such a long time. The guy was motivated. He's going to own a home.
Oh yes, and I have plenty of positive feedback and grateful clients who's been working with you and your team, and stated not once but many times to me that if it wouldn't be for your team, they wouldn't have a mortgage because they have been denied service because their credit was not perfect and because they were just not that typical perfect ideal client with the ideal file that could be pre-approved and could be serviced right there and then. And thank you so much, guys, for
Honestly,
doing this
who is
wonderful
ideal with these high costs and high rates? Who's ideal? It's very rare that you see someone that's ideal. The higher these rates go, Alexandra, the tougher it is to qualify for. So, yeah, you can't segregate that. There's no such thing as a perfect client, to be honest with you. You have to give everyone the benefit of the doubt. If they're motivated, they want to buy a house, we're going to hold their hand. We're not going to give up on them. They will buy a house.
And once again, like the research shows that 1 out of 5 people still hopes that the prices are going to go down, which like it was the hope. Like last year, 4 out of 5 people hoped that the prices are going to go down, and we ended up the year with a positive appreciation on the home prices. Nevertheless, even though we experienced a lot of price drops, but if anybody's interested to know why did we have all those price drops and still ended up with the positive appreciation, I can devote like the whole Wednesday talking about it. But one thing is certain, that less and less people are actually hoping for the price depreciation. And if you want to hope, guys, it's it's your personal thing, it's your personal choice. Go ahead and hope. I've been sending the equity reports to all of our clients who purchased, and like right now we're going for the last year, and most of those folks that purchased last year, they already have equity in their home.
Oh, yeah.
And the further we go into the into the time that they own their houses, this equity is just going to grow. And let alone, I just talked to the client who purchased he purchased one like a single bedroom unit with me in 2020, and guess what? We pulled his appreciation report. It doubled in price. It doubled in price.
Wow.
Yes.
Wow. Honestly, Alexandra, I think early December, when the Fed said he's not going to raise rates anymore, and we saw this literally overnight influx of phone calls. I was in Cuba, but I was having meetings with my team, and they were just cranking it. We're staying late, cranking out pre-approvals. That meeting marked, I think, the change in public's thinking that the prices are not going to drop. So unless we have, I don't know, a drastic, thing in the world like a nuclear war or something, the prices are just going to keep on going up. There's no other way around it,
Yeah,
unfortunately.
our population is growing. Our population is growing, and prices are increasing for everything. You know, like lumber is not getting cheaper, labor is not getting cheaper. So, guys, like if you cannot make this house cheaper, like if you cannot build it for cheaper than you're building it already, how do you expect it to
Well, the
depreciate?
only
And
in
go
my
ahead.
20 years of doing this, the only thing, can you hear me?
Yes, but we
Yeah,
can
the
hear
only,
your phone ringing as well.
I'm sorry,
Thank you.
I'm popular this morning. The only insurance policy against an inflation, Alexandra, is a 30-year mortgage, is a long-term fixed rate interest loan product. Long-term fixed rate product. I haven't a loan longer than 30 years, a long-term interest rate product that is secured against an appreciating asset. Okay? If you've got issues with the word mortgage, long-term, the longer the better, fixed rate product, which means your rate's not going to increase, your payment's not going to go up. Asset per loan that's secured against an appreciating asset, which means your price is going up for that house, but the cost you're paying every month it does not
Is stable.
change. Once you think of it that way, once you think of it that way, mortgage is the biggest blessing, biggest tool of, against inflation. I'll leave it at that.
And before I let you go, I would once again say that if anybody is on the urge of thinking whether they should, their lease is coming up to an end, they have a few months left, and you guys are thinking whether you should buy or should wait for another year, I would do two things. First of all, I would go on to Zillow and see what happened in 2020 through 2022 when the interest rates went down. That's number one. And number two, I would definitely give a call to David and his team and do one thing, like sit down and look at the mortgage calculator and see what happens if you rent a house or if you purchase the same house, because that is something that you owe to yourself, because that those two moves alone can save you thousands and thousands of dollars. And it takes half an hour of your time, but this half an hour can actually pay you back like 10 times, if not more. Thank you, David.
All
Thank you
right.
for being with us.
All right.
And you have a wonderful week to yourself. And we see you in a month for
Okay.
the next, for the update for the month of April.
Okay. All right, Alexandra.
Thank you.
Great seeing you. Bye-bye.
Good to